The bears turn the bulls into steer as the market drops almost 2%. How much more pain should we expect? This is Invest with Jacob. Okay, guys, so the market flushed yesterday, dropping almost 2% off the Friday rally, and now it is approaching a key support zone that will tell us if we're looking at a more direct move down towards 43.50 or if there's going to be a bounce in the wave first. I'll get into all that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. Okay, guys, so with the 2% drop, we broke a lot of key support levels, telling us that we are clearly in wave 4 down, and now it is a question of whether we're going to move more directly or kind of meander first. So let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart, and I've zoomed out just a little bit so you can see more of the structure to understand what wave potentials we are tracking and why we are tracking them. So on Friday, it rallied up and closed at the highs. And then yesterday, it gave us the 2% dump and is now following through in the overnights here. And it's broken some key support and is approaching more key support. So we'll get into that part in just a second. But first, let's talk about the overall structure. So we labeled this as a wave 3 because after we got the move down, we got a 1, 2, 3 wave structure up. And typically that means it's a B wave or a corrective wave as opposed to a 1, 3, or 5 wave. So it's a little bit unclear as to where this 3 goes at this moment, but the structure will tell us more of that as we move forward. So because of that, it's not really a standard C wave setup. And if you look off of this high, you have a clear 1, 2, 3 wave down for wave 1, which you should have a 5 wave structure. And you have a clear 1, 2, 3 up. And then so far we have 1, 2, 3 down again. So it's not a standard C wave in that regard of this is a 5 wave, 3 wave, 5 wave structure. So with that, we have to track a couple of different paths. The first is the standard C wave with the move down being A, the all-time highs being the expanded B wave, and now us being in the C wave as we have listed with 1 down, 2 up, and we're in 3 of C here. For this pattern, this 1, 2, and then 3 to play out and continue on, they need to break this low at 44.92. If they can break this low, it's very likely we are in just the standard C wave down. It just doesn't have the exact structure we're looking for, and it's going to target 43.50 to 4,300 for that C wave down. I think 44.40, which was originally our top end target, is probably off the table as we did not get as high as I was thinking we would get in this move up. I thought we'd be up more in the 48.50 range. So with not getting to that level, okay, the target moves down, and I think 43.50 to 4,300 is likely our landing spot at the bottom should we take that path. Okay, that is going to be our main path for now until they prove to us otherwise. So this market is following through, and we're going to see this support level, okay, if it can hold, then it gives us a much more complex pattern, which why wouldn't it give us a complex pattern? That's all this market's done for the last 2 months. So with that, the second pattern we would be tracking would be dependent on this move down, okay, breaking through this low at 45.22 or so, right around there, but not breaking this low at 44.92. So a move down that doesn't break through, okay, and gives us a bounce can be 2 different structures, and those are going to be our 2 alternate paths for right now. So again, our main path, guys, is we break this low and we continue down in the C wave toward 43.50 to 4,300. But the alternate paths are we break down here and then we find support above this 44.92 zone, okay, and we see a bounce. Now that bounce can be one of 2 things. It can be an expanded running triangle, as we see here. I have the in red, where this would be the C wave down, and then you would see a bounce back up towards 4,800 in D, and then you would get the E wave down back to about 45.30, somewhere in that area, just depending on how the top and bottom here play out. But 45.30 to complete wave 4, and that would be with the A wave being down off the high in November, the B wave up being the all-time highs, C down, D, and E. Now, before you say, Jake, we can't get back to 4,800 that quick, no way. look at where the MACD is on the 1 hour. Remember, every time we hit these low numbers on the MACD, we see these big rallies of several hundred points that come after them. So as this moves down, this MACD will move down with it deep into the support zone. And the deeper it gets into that support zone, the bigger the rally you should expect to see off of it. So it would not shock me at all if we got down here and then rallied about 250 to 300 points up in this D wave to complete that leg of the triangle. So there is one other path that could be happening, and that is where this 3 is a little cloudy on where it's at. So if this 3 is at the all-time highs, okay, right here, then this counts much better. Since this is a 3-wave move down, up, and we have a 3-wave move down here, this counts much better as A in the bounce, for the bounce here. If it can't break this low over here and bounces, this is an A. And then B would come up short of the triangle, would be in the 4730 zone, or right in here, 4730, 4700 zone. And then you would see C down towards this 4300 to 4350 area. So very complex structure because of the 3-wave movements and no follow through either up or down. A lot of 3-wave back and forth whipsaw movements. And because of that, it adds a layer of complexity to what should normally be a pretty standard move down. So the key that we're watching again, guys, is this 44.92 low back here on, I think, December 3rd. Yeah, that low, okay, it kind of holds the keys to the paths we're watching. If we can break through that, which I prefer, that's our primary path, and I prefer it so that 1, it's easier to track, and 2, we get it over with. If we can break through that, we rip off the Band-Aid and we head more directly towards that 4350, 4300 area. However, if we cannot break through this low, okay, and we hold that 4500 to 4520 area and then start to see a pretty strong bounce, then it's very likely we are either in the B wave up towards 4700 to 4730 or the D leg of the triangle up towards that 4800 area with an E sell-off to follow that. So it could be quite confusing coming up when we start to see, a stop and a bounce, because people are expecting this big move down. And this will confuse a lot of people because it will still be part of the corrective movement, but it will look very strong as it does it. So those are the 3 main waves we are tracking, okay? The primary is that we are in C and we break this low and we start towards this 4350 to 4300 more directly. But if tomorrow we are unable to move down and break this low and we see a strong bounce out of there, then we need to be on alert for this triangle pattern or this wave B pattern to play out to the upside before we see lower. Guys, if you like the information that I put out in these videos and you want real-time market updates from me, you need to get in my Facebook group. There's a link down in the description. Go ahead and click that link and it will bring you over to Facebook. Now, once you get over to Facebook, you do have to be approved to get in my Facebook group. But the only thing that I ask is you subscribe to my YouTube channel. So hit that subscribe button down below. Come on over to Facebook and I'll get you in. Once you're in the group, guys, scroll down and you'll see a link to my documented trades. You can check out all the trades we've had on the channel, as well as a link to my Slack channel. Slack is just a free chat channel. I am on there all day giving real-time market updates, all of my buy and sell alerts, and answering all of your Elliott Wave questions. It is a very talented group of traders from the very expert to the very beginner, and an awesome place to learn or improve your trading. So come on over, guys, and let's make some money together. Okay, guys, key takeaways for today. We were watching this 44.92 low. Should that low break, we are in the more direct route down to that 4300 area, 4350, 4300 for C, and then we would look for the start of the new wave back up from there. If they cannot break this 44.92 low and this move down, and we start to see a pretty strong bounce, then it becomes much more likely that we're in this B or D wave as shown here. All right, guys, that is the market update for today. I will talk to you tomorrow.